Ever wondered how credit cards work in Canada and why they are so popular? Well, the answer is both simple and complex. Credit cards have grown in popularity over the years because of their convenience and benefits. In a world where online shopping is becoming the norm, credit cards provide a secure and easy way to make purchases. Moreover, they offer a plethora of rewards like cashback, travel points, and even insurance coverage. These rewards can save you money and offer you experiences that you might not have been able to afford otherwise. But the benefits don't stop there. Using a credit card wisely can help you build a credit history, making it easier for you to be approved for loans or mortgages in the future. This is a crucial aspect of financial planning, and credit cards play a big role in it. And so, by the end of this video, you'll have a better understanding of credit cards in Canada. Stay tuned as we delve deeper into this fascinating topic. So how do credit cards actually work? Well, think of a credit card as a small plastic loan officer you can carry in your pocket. The bank or credit card issuer extends you a line of credit, which is like a loan you haven't taken out yet. This is your credit limit, and it's the maximum amount you can borrow at any given time. When you make a purchase with your credit card, you're essentially borrowing money from the bank to pay for your purchase. This is why credit cards are considered a form of revolving credit. You can borrow up to your credit limit, pay it back, and then borrow again. Now here's where it gets interesting. With a credit card, you're not required to pay off your balance in full each month. You can choose to pay only a portion or the minimum payment and carry the remainder over to the next month. But here's the catch. If you don't pay your balance in full by the due date, you'll be charged interest on the remaining balance. Interest is calculated based on an annual percentage rate, or APR, which can vary widely depending on the card and your credit score. The higher the APR, the more interest you'll pay. And trust me, it can add up quickly. So while credit cards allow you to buy now and pay later, it's important to remember that you're still borrowing money. And just like any loan, it needs to be paid back. Credit cards also offer rewards and benefits like cashback, travel points, and more. But remember, these perks are only beneficial if you're not carrying a balance and accruing interest. So the secret to using a credit card wisely? Pay off your balance in full each month. This way, you can enjoy the convenience and benefits of a credit card without falling into a cycle of debt. Remember, credit cards are not free money. They are loans that need to be paid back. Did you know there are various types of credit cards? Just like a key that opens a door, each type of credit card unlocks a unique set of benefits tailored to individual needs and spending habits. In Canada, we have a smorgasbord of options to choose from. Let's take a brief look at some of the most popular types of credit cards available. First up, we have rewards cards. These are like the golden tickets of the credit card world. Every time you make a purchase with a rewards card, you earn points. These points can then be redeemed for a variety of goodies, such as merchandise, gift cards, or even travel. The more you spend, the more rewards you reap. Next, we have cashback cards. These are for the practical-minded folks who like a straightforward return on their spending. Every purchase earns you a certain percentage of cash back. It's as simple as that. Spend and earn. Travel cards are a jet setter's best friend. These cards earn you points on your everyday purchases, which can then be redeemed for flights, hotels, and other travel-related expenses. Imagine getting a vacation for just going about your daily life. Sounds like a dream, doesn't it? Now, for those looking to save a bit on interest, we have low-interest credit cards. These cards come with a lower interest rate, making them a good fit for those who tend to carry a balance from month to month. Last but not least, we have balance transfer cards. These are handy for those looking to consolidate their debt. You can transfer the balance from a high-interest card to a balance transfer card with a lower rate, helping you save on interest payments. It's like a buffet of financial tools at your fingertips, isn't it? But remember, each card comes with its own set of terms and conditions. It's essential to read the fine print and understand what you're signing up for. Choosing the right card depends on your individual needs and spending habits, so take your time, do your research, and pick the card that fits you just right. One important aspect of credit cards is understanding the associated fees and interest. Let's start with annual fees. These are charges that some credit card companies apply once a year for the pleasure of using their card. The amount varies widely, from $25 to hundreds of dollars annually. While some cards offer perks that may offset this cost, it's crucial to weigh these benefits against the fee itself. Next up are foreign transaction fees. These are charges incurred when you use your card to make purchases outside of your home country. Typically, these fees are a percentage of the transaction amount, often around 3%. So if you're a frequent traveler or love shopping internationally online, it's worth seeking out a card without these fees. Late payment fees are pretty self-explanatory. If you don't pay your bill on time, you'll be hit with an additional charge. The exact amount can vary, but it's often around $25 to $35. To avoid these fees, consider setting up automatic payments or reminders. Cash advance fees are charges that apply when you use your card to withdraw cash. This fee can be a flat rate or a percentage of the cash advance. Remember, interest on cash advances often starts accruing immediately, so it's generally best to avoid this option if possible. Now let's talk interest. This is the cost of borrowing money, and credit cards typically have a higher interest rate compared to other types of loans. It's calculated based on your outstanding balance. The annual percentage rate, or APR, is a representation of your interest rate over a year. It's essential to understand that the lower the APR, the less you'll pay in interest, and while introductory rates can be enticing, always check the standard APR, as that's what you'll be paying in the long run. Being aware of these fees and interest rates can help you avoid unnecessary costs. Whether you're a seasoned cardholder or a credit newbie, getting to grips with these costs can help you make the most of your credit card without any unpleasant surprises. So how can you use your credit card responsibly? It's a question that's often on our minds. The answer lies in understanding a few key principles and putting them into practice consistently. Let's dive in. Firstly, let's talk about the importance of paying your credit card bills on time. This is crucial to maintaining a good credit score and avoiding unnecessary late fees. Remember, your credit score is like a financial report card, and late payments can negatively impact your grade. Secondly, maintaining a low balance on your credit card is a smart move. It's easy to get carried away with the convenience of plastic money, but it's important to keep your spending under control. Ideally, you want to keep your balance below 30% of your credit limit. This shows potential lenders that you're a responsible borrower who can manage credit wisely. Thirdly, it's essential to regularly check your credit card statements. This way you can keep track of your spending, ensure that all charges are accurate, and spot any potential fraudulent activity. Remember, it's much easier to correct a mistake or report fraud if it's caught early. Lastly, protecting your credit card against fraud is a must. Never share your card details with anyone, and always ensure that your card is securely stored. Today's digital world is filled with potential threats, and protecting your financial information should be a top priority. Remember, a credit card is a tool, and like any tool, it can be used for good or ill. It's up to you to use it wisely and responsibly. If you do, you'll reap the benefits of improved creditworthiness, flexibility in your finances, and the peace of mind that comes from knowing you're in control of your financial destiny. Responsible credit card use can help you build a strong credit history. And a strong credit history can open doors to opportunities like owning a home, starting a business, or even landing your dream job. So take these tips to heart, put them into practice, and watch as your financial future brightens. Let's quickly recap what we've learned today. We've demystified credit cards in Canada, breaking down how they actually work. Just like a small personal loan, every time you use them, you're borrowing money that you'll need to pay back, with interest if not paid in full by the due date. We've explored the different types of credit cards: standard, rewards, secured, and business, each with their unique benefits and tailored to specific needs. We also delved into the nitty-gritty of credit card fees and interest, highlighting the importance of understanding the terms before you sign up. Most importantly, we've emphasized responsible credit card use. Remember, it's not free money. Paying off your balance in full each month, keeping your credit utilization low, and making payments on time can help keep your financial health in check. Remember, credit cards can be a powerful financial tool if used responsibly. Thanks for watching.